Hello, everyone. Today on the Final Bar, I'm joined by Dave Landry of DaveLandry.com. He's going to be sharing some of the common behavioral pitfalls that traders trying to run into. I'm really excited for him to share some of these ideas with you. Really made me think as we were talking before the show about some of the ideas to keep in mind. A lot of movement today. Nice gap higher on the inflation data, but cooling off going into the close. What leadership themes can we dissect or can we uncover after today's action? Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of the StockCharts platform. Our platform was designed over 20 years ago by Chip Anderson to empower online investors to better understand the world around them using technical analysis and John Murphy's best practices. We'll uncover some of those best practices and focus on the message of the markets here in a few moments as we get into our market recap. A great guest today, by the way, Dave Landry, sharing with you some of the common behavioral pitfalls that traders tend to run into. Before we get to the market recap, I did want to let you know we have a serious special happening right now at StockCharts.com. If you go to StockCharts.com/special, you will find we're doing a flash summer sale here in the next couple weeks. You can lock in a really good price and a really good value for a StockCharts Premium membership. This is how you can really customize the platform, save alerts, save scans, save all sorts of different chart lists. It is really the way that power users and power investors use our platform to make better investment decisions. To find out more info, go to StockCharts.com/special. By the way, if you're already a member, you can lock in and extend your membership using the current super low rates. It's a really good time to go check that out. Let's get to our market recap. I do want to start with the poll. As a reminder, social media accounts that we run always have polls going. And on our YouTube channel, make sure you subscribe to that. Get your notifications on. You won't miss the next poll. And we asked you recently, which of the FANG stocks, F-A-A-N-G stocks, performs best over the next 3 months? 5 choices, of course: Meta, Apple, Amazon, Netflix, Alphabet. About a third of you, 32%, the top vote getter was Meta, right? With that move higher. And again, the chart of Meta, it's hard to argue out of those 5, which is the most consistently positive in a pretty good uptrend. That would probably win my vote. And it's interesting when you look at the chart of Meta, what's so fascinating about it, you've had minimal drawdowns, right? Even gaps that you had in February, we pulled back a bit, but just the pace of the trend just kind of continued unabated, right? You sort of gapped higher, we pulled back, and then it's like nothing ever happened, just sort of continue higher. Another gap higher in April, we pull back a little, and then we just continue this uptrend. So Charles Dow taught us higher highs and higher lows. That is literally the definition of a trend in a positive phase. The only thing that concerns me with Meta, which honestly concerns me about NVIDIA and other names that we've talked about, Amazon for sure, is this bearish momentum divergence that's been manifesting on a lot of these stocks. Look at Facebook making new highs in early June, mid-June, and early July, and the momentum is lower every time we do that. Now, it's back to overbought conditions with a nice move higher. Meta, one of the big performers today, up almost 4%. So overall, the trend seems to be in place until proven otherwise. It's interesting, the least vote getter, what I like to do on this sort of survey is look for what did not get a lot of love and think maybe there's a contrarian opportunity in there. I agree with you on Netflix. Out of all of these, what's showing the most dramatic change in momentum? Probably Netflix, and you've seen the bit of a rotation here. Overbought in early June as we're retesting the same level around 450. Just below that overbought region. I don't disagree with you. I think Meta would probably win my vote. I think all of these, though, are under, have a big red flag. With the NASDAQ rebalance, of course, which is going to downgrade the weight in these in the NASDAQ 100. I think that has some downside pressure potentially for today. None of them really feeling a lot of pain, though, and continuing to push to the upside. Let's get on to our market recap. Let's look at the big picture about what happened in the markets today. As I mentioned, a nice move higher. The Dow, the S&P, the NASDAQ all gapped higher this morning. Of course, we had the latest inflation data. The CPI number came out, getting closer and closer to that 2% target that the Fed has talked about. Still not there, still more in the 3% range. Core CPI, which are sort of the things like energy and stuff that's not as cyclical, still pretty elevated up in sort of the 5% range. So what's interesting is my perception of what happened is the market initially took that as a big win, right? Inflation continuing to come down, meaning prices are going higher, but at a more reasonable rate, is pretty bullish. And that indicates or suggests that the Fed might be toward the end of their rate hike cycle. They don't have to do much more because it's working, right? Their movements that they've done, the levers that they've pulled have started to slow things down a little bit. By the end of the day, though, it feels like that initial excitement turned into sort of a, but things are still, the Fed's still most likely raising rates here in the month of July. No meeting in August, another meeting in September. At this point, the market is actually pricing in one final hike this month in a couple weeks, and then nothing else for now, is at least what the futures market is pricing in. A lot, of course, that can happen between now and then. The Fed has said they're very data dependent, so we'll have to see what they come back with when we get their viewpoint, as always. But for now, the S&P, after coming off a little bit, finishing more toward the lows of the day, still up about 0.75%. The S&P closing just above 4470. That's a far way above that 4300 breakout level that we've talked about. 4325, sort of the upper end of the range that we'll see in the chart here in a few moments. So a nice follow through to the upside. The NASDAQ Composite leading the way even further, getting up just toward 14,000, but not quite getting there at 13,919, we'll call it. Mid caps and small caps all up as well. Not a big differentiation, I would say, between mid, smalls, and large caps. Although, for the record, small caps did outperform by a bit, up about 1.1%. Volatility continuing to come down as we look at the VIX, down around 1350, and that's down quite a bit from yesterday, right? So what we've talked about through the course of 2023 is sort of this low volatility uptrend. I think that chart of Meta is a good illustration of sort of the pace of the trend, this nice consistent uptrend. Now, the S&P, the NASDAQ, a little noisier, but overall certainly showing some strength. And even with the divergences, even with the overbought conditions, I think you will find on some individual names, certainly the breadth conditions becoming a little overheated with things like the bullish percent index, which we highlighted on yesterday's show. Volatility still remaining fairly low. We're back to a 13 handle, around 1350 right now on the VIX. And again, I would argue that one of the biggest bearish signs or reversal signs that potentially you could see would be a spike in volatility, indicating that there's uncertainty, that there's an injection of volatility. You're not seeing that today. You're actually seeing the market moving higher on lower volatility. Speaking of the color red, interest rates overall moving low from the short end all the way to the long end. Both the long end, the 30-year yield, and the 10-year yield back below 4%. 10-year yield currently around 386, long bond yield around 395. The 5-year point still above 4%. So again, we still have that inverted yield curve, and overall, we've talked about the prospect of higher rates and what that might do. Today, you actually see stocks and bonds moving to the upside. The TLT was up just over 1%. Interest rates actually coming off a bit, and I think, again, the sort of narrative that's playing out today is the less heated up inflation number. The cooling of inflation is really one of the targets, one of the goals of the Fed tightening cycle is to bring inflation down and bring it to more manageable levels. Rates coming off a little bit sort of plays into that narrative that we're kind of getting to the end of this cycle. Maybe we see lower rates from here. I think there's still a long way to go before we can talk about that. I would say rates still fairly elevated relative to the last couple years. Dollar index off a little bit. Again, a big rise in the dollar would probably be one of those risk-off signs, kind of like a spike in volatility. For now, you're not really seeing that. You're seeing the dollar actually pull back a little bit, just about 1.2% lower. Commodities overall, pretty healthy move to the upside, right? Gold and silver in particular. The SLV, which is a silver ETF, was up about 4.5% today. The GLD, which is a play on spot gold, not gold stocks, but actual physical gold, was up about 1.4%. The biggest gainers, right? The group with the biggest move higher as of about 15 minutes ago when I last checked, was gold and gold stocks actually moving to the upside. We'll talk about maybe the GDX or Newmont Mining if we have time through the course of our market recap. Bit of a mixed result, a little lower here in the major commodities, but commodities as a whole having a decent update. Cryptos, I would say, overall getting more and more negative as the day went on. I feel like as we were preparing for the show, the chart of Bitcoin sort of continued to roll over to the downside. Not down too much. Bitcoin down about 1.2%. Ether prices down about 0.5%. Bitcoin's still well above that 30,000 mark, which is sort of that big round number we've talked about many, many times, around 30,270 as of just after the equity market closed today. Let's go to the daily chart of the S&P 500. As always, just see what happened today versus the big picture. What's interesting about the day, again, I was very focused on the gap higher and then cooling off going into the close. But what is very interesting to me is we have made a new high for the year, right? The S&P getting above 4450 really takes us above the peak that we established in June. So we made a new high here around 4450 about a month ago here in mid-June. In late June, just before the 4th of July weekend, we retested that 4450 level and pulled back. Today, we gap higher above that. Is this an exhaustion gap, sort of that gap at the end of the move? That's what we'll be able to answer going forward, right, to see if we get a pullback after today. So I think on a move like today, you make new highs, you gap a little bit higher, nice momentum to the upside. It's all about follow through. I think Thursday into Friday, the question is, do we hold above this 4450 level? In the short term, that would be sort of a follow through to the upside, suggesting further to go, but a nice break above resistance. And again, the most bullish thing the market can do is go up. That was Paul Montgomery, who was a longtime technical analyst. He published a newsletter called Universal Economics for over 50 years, and that was one of his favorite quotes to bring up in this sort of environment. I always think about him and his work when you see a market going to the upside. We can debate why that should happen or whether that continues to happen. The fact is, it is happening. S&P new high today. And again, I think, the most bullish thing the market can do is go up. Let's look briefly at the chart of gold. We'll go to the intermarket analysis watch list here. Look at the GLD, and we'll also look up at like Newmont Mining if we could. So gold actually gapping higher today. This is the chart of the GLD. It's a pretty noisy chart that I've outlined, so sorry for that. But the charts that I use every day tend to be a little more noisy, a little busier. And that's because I tend to think of charts as the conversation you have with the markets, right? This is sort of your discussion with gold and talking about what's happening, think about key levels. What's interesting today is we've now gapped back above the 180 level. That's this horizontal line in red. That's just been a support and resistance level a number of times, what I would call a pivot point, which is sort of that level that just keeps coming up over and over. We sort of gapped above there. That was the peak that we saw over the last couple weeks. Gapping above there is pretty meaningful. We're now testing the 50-day moving average yet again. We've been below the 50-day for about 2 months now, since the middle of May. Getting back above that 50-day moving average really clears the way further on, right? 184 in the short term, that's sort of the short-term level of resistance, but overall, certainly appears to be rotating to the upside. I would keep an eye on the momentum down here. You can see I've shaded in these green and red regions when the momentum overall has been in a bullish phase or a bearish phase, and overall, the RSI was more in a bearish phase for quite some time here. Now starting to get back up to that RSI 50, now up to RSI 60, and getting above 60 usually tells us we're in more of a bullish phase because there's enough buying momentum or buying power pushing prices to a new swing high. That's what I would be looking for in the chart of gold. Now, it's actually becoming relevant when you think about the strength in gold because charts like Newmont Mining are moving to the upside. To finish off our market recap, we'll look at this ACP view that I've created, just so you know what we're looking at. This is the weekly chart on the right half. The bottom left corner is the daily chart. The upper left corner is just a zoom into the candle chart, just to look for any particular patterns. And what's interesting about this is it just tells you the short-term look. What's interesting about the chart of Newmont is today we gapped higher. We closed almost right at the 200-day moving average. That's this line in red. So you often expect support or resistance at a moving average like the 200-day. Getting through there, getting that follow through is really important. So names like this that have had a push higher now midweek, I'd want to see if Thursday and Friday you can break above the 200-day and hold that. But Newmont Mining potentially started to rotate after making a new low around 40, a new low for the year, starting to rotate back to the upside. And I think it could be interesting upside potential if we can get through the 200-day moving average. Domino's Pizza, a gap higher today. This is one of the biggest gainers looking at the large cap space, up about 11% today. So a nice move higher. Gapped higher, and this is it reminds me of sort of the one of those things where you gap higher, and all of a sudden everyone sort of wakes up and goes, "Uh-oh, now Domino's is at 400. Is that really where we should be?" So you saw I had quite a volatile session. At the end, we closed below the open, but that's after I had a pretty wide range from high to low. So closing the day around 388, 389. Again, gapping higher about 11%. Again, the idea of an exhaustion gap comes to mind. And what that is, if you missed our conversation before, is when you have a big run higher, you have a big gap. And so often you like to see what happens around that gapping name. What happens soon after, I think, is often super, super telling. And if you look at what happened back here a couple weeks ago, we gapped higher and then traded back into that gap. And I often think of the gap levels, that range, as being a big resistance or support range, right? A zone. So pulling back to that level could be reasonable. It means you've got a lot of support below current levels. We'll see what happens and if we get follow through. But after a gap, it's all about what happens after that. Do you see additional buyers that were not just excited to buy it at 350 and cash out at 380 to 400, but ones that are additionally coming in and willing to buy the stock at 390, 400, 400 plus? That's how you get that follow through to the upside. We're not seeing that yet, of course, but that's what I'd be looking for through the remainder of this week. I feel like it's gap days because you see a lot of these names that are sort of pushing higher to a little bit. We'll look at a daily chart of Invesco, switching to the financial sector. Invesco, of course, IVZ is in the asset manager space. What's interesting about this one, this move higher is just sort of this last gap higher just right here. That's today's move. Now, as opposed to Domino's, which gapped higher and then traded lower through the day, here we actually gapped higher and then followed through. So after the gap, you have additional buying power pushing prices higher. What's interesting about the chart of IVC, you have a clear resistance level right around $20. That was the peak in December of last year. That was the peak in early February. Now that we've gapped higher, now that we've broken above the short-term resistance around 17.15, 17.20, I think there could be upside back to these previous swing highs around the December and February levels, around $20 a share. We'll see if we continue there, but based on the breakout, that would be my upside objective in the short term on a name that started to work a little bit. Just because I have that little candle chart, I have to highlight DraftKings. DraftKings has been one of the stronger charts here over the last 6 to 12 months. Really, I mean, a nice rotation to the upside. 2023 has been a nice, strong move on the weekly chart. You see this downtrend in the second half of 21, first half of 22, this big bottoming pattern, finding support, and now rotating higher. And you have to remember, this is quite a gain from around $12 up to $32, which is near where we're at right now. We're currently around 30. 50. Today, the gap higher, but the dreaded shooting star candle. So that's a candle pattern when you're in an uptrend. You have the open and close near the lower end of the range, and you have this big upper shadow. So what that means is, think of it as a shooting star. We opened low, we traded up, but by the close, we're kind of right back toward the lows. That actually tells you short-term weakness over the next 1 to 3 bars is what you'd generally kind of think of that as. So it might be interesting. Nice overall. The trend I would still say is fairly positive. A pattern like that tells you maybe short-term weakness, maybe a good pullback opportunity, and maybe look at some of those moving averages. The 21-day EMA, excuse me, the 13-day EMA I have here around $27, maybe a short-term place to be. Finally, just to finish off our market recap, Palo Alto Networks, PANW, pulling back a little bit today. This has been one of the stronger sectors, of course, technology, best performing sector year to date. PANW has been one of the strong stocks among many in that sector. We've seen the bearish momentum divergence, higher highs in price, mid-June to early July, lower peaks in momentum, mid-June to lower July now, or early July. We've now traded lower through the course of the day today. We've broken down a little bit. 50-day moving average coming up around 219, 220. That could be the level to look for. In an uptrend, stocks can pull back, and that's something to remember. It's actually a pretty encouraging thing, right? If you missed on the move, maybe we pull back to an actionable level, but now is the time to look left on the chart and anticipate what levels could be of meaning, what levels you want to pay attention to. I also might draw a trend line using those lows. Kind of comes around right around that 50-day moving average. I want to bring on today's guest, Dave Landry. First, just a couple quick announcements to share with you. First off, our mailbag is always looking for additional questions. We're going to hit a special mailbag episode this Friday, and the mailbag is now almost empty. We would really appreciate your questions. What are you running into as you are trying to analyze the markets and trade using the technical analysis toolkit? Our email is thefinalbar@stockcharts.com. We're on the Twitter @finalbarsctv, and on our YouTube channel, of course. Just put a comment below the video you're watching. We would so love to hear from you. We'd love to answer your question live on the air. Also, to let you know, I'll be doing a webcast next Tuesday. I'll be doing a session called Moving Average Strategies for Investors. I'm often asked about moving averages, which ones to use, why we use the 200-day or the 50-day, what are exponential averages versus simple averages. I'm going to take about 50 minutes and go through all of those questions and share with you which ones I use, how I use them, and give you some tips and tricks. I found a lot of moving average related content is much more shorter term. We're going to think a little bit more medium term, long term, and how some of those shorter moving averages should still be a part of your awareness. To sign up for that free event coming up next Tuesday, the 18th, go to marketmisbehavior.com/moving average. I want to welcome on today's guest, Dave Landry. Dave's the founder of DaveLandry.com, a longtime contributor to Stock Charts and host of his show on Stock Charts TV. Dave, coming to us from New Orleans, it is so good to see you. How are you?
Great to be back. Doing great. Thanks for asking, Dave.
No, it's a pleasure to have you on as always. I appreciate you being a frequent guest and always have some good ideas with us. I asked you to do something a little bit different today. We were talking about behavior, and you and I have a sort of a similar focus on mindset and your mental state and what sort of behavioral issues a lot of investors and traders are running into. I asked you to present 3 behavioral trading pitfalls to avoid.
Yes.
Start us with the first one. What should we keep in mind if we're running into trouble here?
Well, I think impatience would be the first one. And we live in this so-called microwave society where we expect everything. And obviously Blockbuster's out of business because nobody wants to drive to get a movie. You just download one. We all expect everything like right away. And it takes a while for trends to develop and things to happen. And we waited forever for the recent trends that we caught, luckily. And it took a long time, and a lot of people were giving up. And like one guy said, look, I'm going to go see if I can find somebody else. And I said, well, that next guy's going to look like a genius. And since then, we've had about a 9% run over a couple of months, which is pretty huge, as you know. So trends take a while to develop. And then once you get in them, for instance, we got in Riot a few months back, and it just went absolutely sideways, but it didn't stop out. And everybody gets impatient when that occurs. And then, of course, as soon as you throw in the towel, it takes off without you. So follow your plan. Stick with it until you're stopped out. And I read somewhere about being less wealthy as a trend follower. I don't know who to attribute to that. But boy, I've done a lot of presentations before I've ever heard that on that, because the market spent a lot of time backing and filling. I think Greg Morris said markets only spend about 4% at new highs. And even when you're in a great position, you're constantly giving that money back up. And the money tends to come in chunks. You know, market takes off, you make a lot of money. And that's why we take partial profits and trail the stop, because a lot of times it comes right back in. And the other thing, too, is like you have to give yourself time to learn. You're a pilot. How long before you were able to sit behind the wheel or the stick, whatever you call it?
Yeah, they tell you to be very patient and wait for it, especially takeoffs and landings, which are super challenging. It was a long time before I even had the courage to take the rudder for that sort of thing.
Yeah, you know, and so like in trading, people just dive right in. And you know, I always use the example of how long it takes to be a doctor, a lawyer, or automatic transmission mechanic. But even a plumber takes literally 5 years to become a plumber. And there's a career path. And I've done a lot of that with my educational stuff, as are you. And you just have to give yourself some time. And you just can't just dive right in. So most people impatient to get in, impatient waiting for trends, and impatient once they're in a position.
Yeah, I was going to say that whole idea of having more patience, it's not just at one part of the process. I feel like that's everywhere, right? It's impatience of feeling like you need to be there for everything. It's being impatient when the market doesn't move and feeling like you can force it. What sort of things do you keep? How do you become more patient or less impatient as a trader? What sort of ideas would you have?
Well, you're going to have to put some commitment devices in place. Sometimes use like an actual stop if you're in a position and you don't want to micromanage yourself out of it. Commitment device could be walking away. Like one of the traits I'm talking about in a second here is hyperactivity. And it's like, if I know I'm going to be sucked into trading too much, sometimes I'll physically walk away. So you have to put in these commitment devices, and you know how to stop yourself from doing these type of things. And like I have a doctor client of mine, and he hands his phone over to his secretary after a certain time, and she changes his password for the day, and she changes it back at the end of the day. So you need to come up with some sort of commitment type device to make sure you're doing the right thing.
I love that. You sort of alluded to number 2, hyperactivity. Talk us through that one.
Yeah, you know, I was talking with Bruce Frazier at ChartCron, and his family used to work with or maybe still does, with the horse racing industry, and they do the gates and picks and shovels type of thing, not the actual betting or raising the horses, et cetera. And he was telling me a good handicapper might only make 1 or 2 bets a week, but he's there every day doing his work because the VIG's like 20% or something. And in today's day and age with zero commissions, there's still slippage out there. And then you're still going to lose money if you're really, really hyperactive. And I'm guilty of that too. And that's another one of those commitment devices type of thing where you have to just sometimes walk away. The real money is in the longer term trends. And one example that I mentioned to you is I got into the Qs with the TFM 10% system, and that was 50-something points ago and 20-something points ago. And when I find myself staring at a screen all day trying to squeak out a little bit here and there, it's like, dummy, just hang on to these longer term trends and follow your core methodology. And in my trading service, that's exactly what I do. And it forces me to actually follow it. So that's another commitment device is doing what you say you're going to do, and maybe have somebody hold you accountable in the process.
I'm already in love with these first two, Dave. And I'll never, for just as a quick story, I remember meeting with an institutional trader, and I was asking him some questions about what I was doing. I was like, all right, so in this environment, what do you do here? Just expecting him to give me some ideas or some levels, because kind of a choppy chart. He said, I'll tell you what you do. You put your hands on the desk, you push it back, you get up and you walk. And he literally did it. I was like, okay, good lesson. I appreciate you've hit on that same sort of thinking. What's the third behavioral pitfall we run into?
Well, not seeing what is, and I'm sure I'm butchering her name, but Anaya Nin once said that we don't see things as they are, we see them as we are. And I often say we don't see the markets as they are, we see them as we are. And once you have a position, you're going to be biased. And one of my favorite quotes is confusing the issue with facts. It's like, let's say a stock's going down and you're long the stock. Well, all of a sudden you start justifying why it should be going up instead of just seeing what is. So using logic and reasoning. And you got to realize that markets are emotional, and so are you. And Linda Rasky once said, if you don't know which way a market is headed, ask a 6-year-old kid, because he's not worried about his 401k or his brokerage account or whatever's going on. He can just tell you if it's going up, down, or sideways. So I thought that was pretty good advice from Linda. In fact, I've said that so many times, people attribute it to me, but it's actually Linda where I lifted that quote from.
That's well said. You know, it's funny what I'm getting out of the comments, all of these 3 steps, Dave, is it really speaks to how you need to know yourself, right? You need to have an awareness of who you are and what your strengths are and what your weaknesses are. I'm curious, you've had a successful career, not just trading, but educating others. How long did it take you from when you first tried to trade or started to trade to actually feeling like you had a good awareness of who you were, what you brought to the table?
Oh, I would say at least 5 years. And I would go on to say it never ends. And that's part of my, one thing I do a lot of is I do a lot of writing. And I know you do the morning pages too. I do the same exact thing every day. Yep. And that really unearths a lot. And then, take really good notes when you're doing your trades and all. But there's always a psychological aspect, and that doesn't go away. And I've learned in more recent years, there's a neurological aspect too. And that's something that you can't escape. People might argue about psychology, but you can't argue about neurology. So, just make sure you document what you're doing and make sure you're not becoming the definition of insanity where you're doing the same thing over and over and expecting a different outcome.
Oh, everything you've said, Dave, they're like little nuggets of trading wisdom. Document what you're doing. I hope people are taking notes with each of these. These are 3 fantastic pitfalls. Any additional comments, any final things you'd throw at us?
I would say overcomplicating things. I have a very simple methodology, and I teach it to people, and I have a trading service that I show them what to do and all. And when people become a little successful with it, the first thing they do is they just overcomplicate things and they go out on a grail hunt. It seems like everybody has to get that out of their system. But it's like, for some reason, I just can't understand why they have to make things so complex. And if you look at the current portfolio, which I just did a Trading Simplified on, almost all those patterns are just a simple pattern I call Landry-like pullbacks, which you could scan for on stock charts. And it's nothing magical about them, very simple, straight up lines drawn on the charts with the moving averages, et cetera, pull back to the moving average. And, like the examples I used was somebody sent me charts where the stock just looks like electrocardiogram. And it's like, this is what a good stock looks like. This is what you should be trading instead of trying to overcomplicate things and then just try to go after everything out there.
I feel like you're the master of simplifying in a lot of ways, Dave. And again, just simple. I've often referred to the simple arrows that you sort of define, right? Markets can go up, they can go down, they can go sideways. And remembering that, I think, is so valuable. This was a lot of fun. I really appreciate you being willing to share some insights with us, Dave. And I appreciate you sharing some trading wisdom. Stay safe, be well there, and we'll talk to you again soon.
You too. Thanks for having me on.
That's Dave Landry, the founder of DaveLandry.com. Again, sharing with us 3 behavioral trading pitfalls to avoid if you miss it. Number 1, impatient. Be patient. Wait for the right pitch, as I tell my son Henry, learning baseball. Number 2, hyperactivity, and really not feeling like you have to overforce everything that goes on. Keep it simple and focus on the right opportunities. Number 3, not seeing what is, right. You see the markets as they are. You don't see the markets as they are. You see them as you are. I think that's a fantastic thought. And one bonus tip I'll say was the third one was don't overcomplicate. Let's simplify. Great take there from Dave Landry at davelandry.com. We have to wrap it up, folks, to go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. You know, we haven't talked too much about breadth. We have occasionally, but really haven't dug into some of the details. And I noticed as I was going through my daily review, what I call the morning coffee routine, the first set of charts that I look at, it's the same set of about 25, 30 charts. And then I kind of go further on based on what I see in that initial run. And one of the charts I look at every day are the new highs and new lows. And one of the things that I've noticed was sort of increase in new highs. And you really saw it continue through the course of the day today. You really saw it reinforced the strength. What I wanted to point out is this top series. So you have the S&P at the top, and then we have at the bottom new highs for the S&P and new lows in red. Then we have for the New York Stock Exchange, new highs in green, new lows in red. And these are all new 52-week highs. This series here in black and red, this histogram, is showing the daily spread between new highs minus new lows. The difference today, 405, this is on the New York Stock Exchange, is the highest level we've seen in 2 years. The summer of 2021 is the last time we had this big of a spread on an individual day of stocks making new 52-week highs and new 52-week lows. It shows you the strength, right? Some of the gaps that we showed, some of the moves higher in IVZ, in Vesco, in Domino's, in many others, gold names, right? These moves and these swings. With 52-week highs, you're seeing quite a differentiation between names really pushing to the upside and just not many stocks sort of undercutting their previous lows. So the strength in the markets in a lot of ways can be defined by the breadth. And I would say at this point, the breadth is more constructive than anything. I'm seeing stocks making new 52-week highs. That's what a market in a strong uptrend kind of looks like. Chart number 2, Meta Platforms. You know, I'm reminded of, I think, Dave Landry's behavioral pitfalls were just fantastic. Each one of those I want to think into and dig into a little bit more on my own. But, you know, one of the things that I keep in mind is just keeping it simple. When I look at the chart of Meta, I'm thinking, why do I overcomplicate this? If I showed this to my 7-year-old son and asked him, is this going up or down? I think I know what he would answer. And all I need to do if I'm looking at a name like this, or if I hold a position like this, is just identify ways I can continue to lock in those gains. Follow that trend up, and then the trend will tell, right? The chart will tell me when that trend is reversed. And I have things like a chandelier exit system, things like a 21-day EMA, which I'm showing in green on the chart, all sorts of other tools that I can use, trendline analysis, all sorts of other ways that I can just measure and define, is this trend in place? And for now, on a leading stock like Meta, the trend is still going up. Now, what Greg Morris, who's a mentor to both Dave Landry and I, would say, all new highs are bullish except the last one. So let's always be ready for something to turn lower. Just be diligent and focus on the evidence. Finally, Enphase Energy, ticker ENPH. This is in a group called Renewable Energy Equipment. That same group has things like solar names, things like Plug Power and others that you may be familiar with. Enphase at times has been one of the stronger charts out there, but not recently. Year to date, Enphase has actually been in a pretty good downtrend, while the market itself has been in a pretty constructive pattern. What's interesting about the chart of Enphase today is we had a nice 5+% move to the upside. We're approaching the June swing high around 190. What's interesting about this downtrend year to date, really since December, is we've kept making lower lows, and on the rallies, we've never really gotten above those previous highs. Often you can see that the bounces higher line up really well with previous highs, or in the case of June, really well with this gap that we had in late April. That may be starting to change, and I think the way this pattern breaks is all of a sudden, instead of making a lower high or making a similar high, we make a new swing high. Getting above 190 would be a nice follow through to the upside, and that's after bouncing off of a pretty good support level around 150, 155. This could be a bottoming pattern. The bottoming pattern is confirmed if we break to a new swing high, if the momentum continues a little bit further, but for now it's starting to look a little more constructive than it has in quite some time. Folks, that's a wrap for the show. Thank you so much for joining us every weekday after the close for the Final Bar. Such a pleasure to put the show on for you. Really want to thank Dave Landry of davelandry.com, joining us remotely from New Orleans, sharing with us some behavioral pitfalls that traders tend to fall into. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good one.